It's that time of year once more. The 13F filings are now out, allowing us to see inside the portfolios of the world's top investors. And if we turn to the biggest and finest investor of all time, Mr. Warren Buffett, there was some interesting action in his file this time. He revealed in his disclosure that he had sold his share in Activision Blizzard. Now, if you have a keen eye, you may have previously worked this out, since Berkshire did declare this in a past SEC filing, and it made the rounds at the time. But now we see it cropping up in what was undoubtedly the most important lesson from his 13F filing. Warren Buffett initially purchased Activision Blizzard in the first quarter of 2022, after Microsoft declared their intention to acquire the company in order to add yet another set of big-name video game titles to their Xbox business. And at the time, Buffett referred to this as a workout or a dangerous arbitrage play, in which he was not necessarily purchasing Activision for the sake of the firm, but rather keeping it because there was big money to be earned if the acquisition was successful. Activision shares were selling at around $81 at the time, but Microsoft's proposal would see them purchase all of the shares from investors for $95. This indicated a possible 17% gain if the sale went through, and Buffett seized on it. It's a sizable sum for a straightforward transaction, yet as we now know, the deal was met with strong opposition from both the FTC in the United States and the Competition and Markets Authority in the United Kingdom, a disagreement that has yet to be settled. And while Activision Blizzard shares have lately closed up near $90, aka bettors are forecasting a far larger likelihood that the merger will be completed. Now it appears Warren Buffett was not interested in staying to check out what his 13F filing revealed. Now it appears Warren Buffett was not interested in staying to check out what his 13F filing revealed. During quarter 2, he chose to sell 70% of Berkshire's Activision Blizzard stock. And for those who were paying attention, he had already signaled that this was possible. Buffett did precisely what he said. He made a profit. And if you compare the Activision share price from when he purchased to when he sold, Buffett probably didn't even lose money. He would have paid around $80 per share if he had purchased following Microsoft's announcement. However, the stock's low point in quarter 2 was at $76. It's incredible that Buffett was able to escape the situation relatively unscathed, even after the FTC and the CMA announced they would try to stop the acquisition due to the 17% spread between the share price and the proposed acquisition price back in quarter 1, 2022. Wait a minute, we understand what you're thinking right now. Buffett only liquidated 70% of his holdings. Why are we jumping to the idea that he sold out? Didn't he still own some stock? The answer is, of course, no. He no longer owns any stock, but Berkshire Hathaway does. Why? Because of Ted, or Todd, that is. Remember that there are 3 people represented in the 13F while looking into Berkshire Hathaway. There's Warren Buffett, Todd Combs, and Ted Weschler. Warren Buffett makes the large mammoth investments, while Ted and Todd each oversee around $15 billion. Buffett began purchasing Activision in the first quarter of 2022. Right, we'll check into this. Berkshire Hathaway purchased 14,658,121 Activision shares in the fourth quarter of 2021. Therefore, either Ted or Todd quickly and for various reasons developed a position in the business the quarter before Microsoft's announcement. What are you going to do today? Examine their most recent 13F filing. They own 14,658,121 Activision shares. Now, while aka Ted or Todd are still holding on to their shares, Buffett has chosen to sell his. So, with that, we conclude Warren Buffett's role in the Activision Blizzard affair. However, despite the fact that this one did not go as well as he had hoped, he most likely did not lose money. Although, if you are still an Activision Blizzard shareholder, we would not necessarily conclude that the Microsoft-Activision merger will not go through today simply because Warren Buffett sold Warren Buffett mostly leaves when he no longer knows what the outcome will be. But to be honest, the market has grown greater confident that this deal will go through since he departed the role. The stock price has already closed up to roughly $90, representing a 5% margin. The stock price has already closed up to roughly $90, representing a 5% margin, much closer to Microsoft's $95 per share offer. But with that out of the way, let's look at some of the other important anecdotes from Buffett's 13F. Berkshire also decreased its stake in Chevron by 7%, which is a significant move given that the holding is worth roughly $20 billion. We're not sure why, but we know Buffett doesn't normally cut positions, so this might be related to tax planning or simply taking some profit off the table. Remember that Buffett invested substantially in Chevron in the first quarter of last year, and the stock has risen nearly 25% since then. So, he might just be locking in a profit on some of those shares, or perhaps some of the shares he purchased earlier. Berkshire also continued its acquisition of Occidental Petroleum, Berkshire's sixth largest holding in the portfolio. He has now purchased Oxy shares in 5 of the previous 6 quarters. And get this, he owns more than a quarter of the corporation. We'd also like to emphasize that Buffett's moves in oil stocks do not indicate his forecast for where oil prices will be in the medium term. Many observers interpreted his investment in oil businesses as a major gamble on high oil prices in the future. But Buffett has already stated that, quote, "If we were in an oil stock, it would be because we believe it offers a lot of value at this price." However, this does not imply that we believe the price of oil will rise. We could buy oil futures if we felt the price of oil was going higher. So, don't use his movements in energy firms as an indication of future oil prices. However, they were Buffett's movements in the oil stocks. Berkshire also added 25% to Capital One Financial, cut 39% from Celanese, decreased their General Motors investment, cut 60% from Globe Life, and sold out of McKesson, Marsh & McLennan, and Vitesse Energy. Then, they purchased 3 new stocks, D.R. Horton, NVR, and Leonard Corp. Activision was demoted from position 9, and GM was demoted from position 17. Aside from that, the remainder of the swings are occurring in the bottom half of the portfolio, implying that they are not particularly relevant to the Berkshire portfolio as a whole. D.R. Horton, for example, was the largest new purchase this quarter, although accounting for only 0.21% of Berkshire's portfolio. In truth, these new buys are most likely Ted or Todd, since Buffett would not bother with acquisitions that had such a minor impact on the portfolio. So, that's the main takeaway from Berkshire Hathaway's 13th quarterly report. The only other thing we wanted to add briefly is that Apple has also risen so substantially since Buffett's investment in 2016 that it now accounts for more than half of Berkshire Hathaway's US holdings. Consider how different Apple is from other companies in the portfolio. The next largest stock, with 8.51%, is Bank of America. Absolutely incredible how much that investment has increased. However, keep in mind that while we do agree that having one company make up more than 50% of your portfolio is unpleasant, if you're someone who might get a little tense when you see that weighting, you might not be the only one. We must keep in mind that this is only Berkshire's US stock portfolio. And if you read any of Buffett's yearly letters, you'll quickly discover that it's nothing to be concerned about, because the stock portfolio is only one component of Berkshire's company. Remember that they also have a large number of insurance companies. They have a major railroad company as well as Berkshire Hathaway Energy. On top of that, they have a big interest in Apple as well as lesser assets in other firms. They're not completely sold on Apple shares, albeit it is a significant part of Berkshire's entire company at this time. That being stated, that is everything Warren Buffett acquired and sold in the second quarter of 2023. Thank you so much for your time. Please give us a like if you enjoyed it, and subscribe if you want to see more. That being said, we'll see you in the future video.